Hey guys, welcome back to BullionIQ, your go-to channel for expert insights on cryptocurrency and the latest in finance. If you're new here, make sure to hit that subscribe button because today we're diving into something that is truly eye-opening about Ripple, XRP, and the way big institutions are moving in this space. Trust me, you don't want to miss this. Before we jump in, a quick thank you to everyone who's been liking, commenting, and subscribing. Your support makes all of this possible. Now let's get straight to it. For the longest time, there's been this story going around that Ripple is trying to integrate with the biggest banks in the world. That narrative has been floating around for years, and many people believed that for Ripple to succeed, they had to get big banks on board. But here's the twist. The real situation might actually be very different. There's a brand new perspective emerging, and it changes the way we think about Ripple's strategy entirely. Today, we're going to break this down and also look at some astonishing numbers coming out of the XRP ETFs. These figures are so striking that they might actually surprise even the most seasoned crypto enthusiasts. Before we dig into the data, let's set the stage with the big picture. Over the past few months, there's been a huge institutional movement out of Ethereum. A lot of large investors are realizing that Ethereum, while great for building apps and experimenting with financial projects, has its limitations. Once a project grows beyond a certain scale, being tied to Ethereum's ecosystem can be restrictive. This is where XRP comes in. The creators of the XRP ledger understood early on that it didn't need to host every single application. Instead, XRP was designed to be interoperable with all other networks, allowing value to move efficiently and settle quickly. This makes it extremely attractive to institutional investors who are looking for something tangible, something that actually works in the real world. While other cryptocurrencies are still largely speculative, XRP has a clear and proven use case in cross-border payments and settlement, and that is why we're seeing a growing wave of investment flowing into XRP ETFs, even outpacing Bitcoin, Ethereum, and Solana at times. What's really exciting here is the type of investors entering the market now. These are not the same retail investors from 5 or 10 years ago. Institutions today want clarity. They want a solid thesis for why they are investing. Ripple offers that in spades. It has a real functioning product, and that makes it much easier for investors to justify allocating large sums of capital. We're not just talking about hype or speculation. We're talking about a system that is proven, scalable, and ready for institutional adoption. And the timing couldn't be better. XRP is showing signs of reversing its recent downtrend. After a period of decline, we're starting to see initial moves toward an uptrend. And this could be the beginning of a strong momentum shift. But even beyond the price chart, the bigger story is Ripple's infrastructure strategy, which we'll dive into in part 2. To wrap up this introduction, remember that what's happening with Ripple is bigger than just cross-border payments. It's about creating a whole new financial architecture, a system that banks may eventually have to plug into, rather than the other way around. The implications for XRP and institutional adoption are massive, and today's video is just the beginning of exploring that. Stay tuned, because in the next part, we'll break down exactly how Ripple is quietly re-engineering the banking system and why this could be a game changer for the entire crypto sector. For a long time, people assumed Ethereum ETFs would dominate because Ethereum had such a strong ecosystem with smart contracts, DeFi, and countless applications. Bitcoin ETFs were considered the gold standard, obviously, but many thought that XRP was always going to be behind. The reality, as of December 2nd, is very different. XRP ETFs are actually seeing the largest inflows compared to Bitcoin, Ethereum, and even Solana. This is a huge signal that institutional investors are shifting their focus. What's fascinating is that Ethereum, which has long been considered the foundation of decentralized finance, is now experiencing outflows instead of inflows. Investors are moving their capital out of Ethereum and reallocating it to projects like XRP. Why is this happening? Well, Ethereum is great for experimentation, but large-scale projects quickly realize that being confined to Ethereum's ecosystem can limit their options. Once you scale beyond testing, you need your own infrastructure, your own chain, and the ability to operate independently. Institutional investors are recognizing this, and they are acting on it. XRP, on the other hand, is designed with a completely different approach. The XRP ledger doesn't force projects to be built on top of it. Instead, it provides interoperability and efficient settlement for value transfers. This makes it ideal for institutions that want something reliable, scalable, and compliant. Unlike speculative tokens that may or may not have real-world utility, XRP has a clear purpose. It enables fast cross-border payments and settlement. That clarity is what attracts big investors who need to justify multi-million or even billion-dollar allocations. Now, let's talk about what this means for ETF flows. When institutions are buying XRP through ETFs, it's not just hype. It's strategic capital being allocated to an asset that has proven utility and a working network. These inflows matter because they create liquidity, drive demand, and ultimately strengthen the market position of XRP. As more money comes into the XRP ETFs, it could push the price higher, while simultaneously locking in institutional support. This is something that many retail investors don't fully appreciate yet, but it's a critical factor for long-term growth. Another key point is how the investor profile is changing. The people entering the market today are not casual traders looking for a quick gain. They are highly sophisticated professional investors who evaluate technology, adoption, and scalability. XRP ticks all of these boxes. Its use case in cross-border payments is proven, and it's gaining traction among institutions globally. In contrast, Ethereum, despite its popularity, is facing challenges because its infrastructure isn't as flexible for large-scale financial operations. This shift is also reflected in the overall market trend. XRP is showing signs of reversing its downtrend after months of pressure. We're seeing initial upward momentum, which indicates that institutions are not just accumulating quietly, they're positioning for growth. Every inflow into XRP ETFs reinforces this trend, creating a foundation for further adoption. The combination of tangible utility, institutional capital, and strong infrastructure makes XRP a standout in the current market. So, if you're an investor trying to understand where the smart money is going, XRP's ETF numbers are a clear signal. These inflows are not random. They are a direct reflection of institutional confidence. As we move forward, it's important to keep watching these trends because they often indicate where the broader market could follow. XRP isn't just another cryptocurrency. It's becoming a cornerstone of institutional strategy in digital assets, the way Ripple is approaching banks and financial infrastructure. For years, people assumed that Ripple's goal was to integrate its software into existing banking systems. The common narrative was that Ripple needed banks to adopt its technology to succeed. But here's the twist. The reality seems to be almost the opposite. Ripple is quietly building a new financial architecture, creating infrastructure that banks will plug into rather than the other way around. This is a subtle but massive difference. What Ripple is doing is designing a dual-rail settlement system. Essentially, fiat currencies remain on the bank's balance sheet, while stablecoins like ROUSD operate on Ripple's rails. Both sides work separately but function together as a unified system. This setup is incredibly clever because it maintains regulatory compliance while allowing digital assets to move efficiently. Banks don't have to restructure their internal systems or touch the stablecoins directly. Ripple is creating a plug-and-play infrastructure that any bank can adopt. Think about what this means strategically. If Ripple secures a banking license, it essentially becomes the backbone for global financial settlements. Banks won't need to integrate Ripple's products into their legacy systems. Instead, they will use Ripple's platform to handle tokenized value, stablecoins, and cross-border settlements. This drastically reduces regulatory friction and creates a streamlined approach for institutions. In other words, Ripple is positioning itself as the plumbing of the modern financial system. It's not just another crypto company. It's becoming a foundational infrastructure player for banks. This strategy also highlights why XRP's use case is so critical. When we talk about XRP as a medium for moving and settling value, it's not just a speculative asset. It becomes the system's backbone, the actual mechanism through which settlements occur. Institutional investors are starting to see this clearly. They are recognizing that XRP is more than digital gold or a tradable token. It's the operational utility within Ripple's growing financial network. That's why these investors are reallocating funds into XRP ETFs and why inflows are increasing at such a rapid pace. Moreover, Ripple's approach creates a long-term moat that is very difficult for competitors to replicate. Banks have deeply entrenched systems that are expensive and complicated to modify. Ripple is offering a ready-made infrastructure that integrates without disrupting their existing operations. Once banks start adopting this model, it's unlikely they will switch to another provider because Ripple's system becomes embedded into their operations. This gives Ripple a significant strategic advantage and strengthens the value proposition of XRP as the underlying asset powering these transactions. Another key point is Ripple's global expansion and partnerships. From working with major banks to collaborating with Google Cloud and expanding licenses in countries like Singapore, Ripple is consolidating its presence as a trusted infrastructure provider. Acquisitions like G-Treasury and Fortis further enhance this network. It's not about expanding product lines randomly. It's about creating a unified, scalable settlement layer for institutions worldwide. Every move Ripple makes is aimed at reinforcing the adoption of XRP within this infrastructure. XRP has been stuck in a downtrend along with much of the crypto market. We've seen a consistent decline, and at first glance, it might seem concerning. But when you look closer, it's clear that XRP has been holding at strong support levels, which suggests that buyers are still stepping in at key price points. This is a critical stage because it's where the market decides whether to continue downwards or start reversing. Right now, XRP is showing the first signs of an uptrend forming. We're seeing green candles appearing after bouncing off the bottom, indicating that momentum is shifting. If XRP can push up to the $2.30 level and hold, it would confirm that the downtrend is over and set the stage for a sustained upward movement. This is not just about short-term speculation. It aligns perfectly with the larger narrative of institutional adoption and inflows into XRP ETFs. When you combine strong fundamentals with a potential technical reversal, the outlook becomes extremely compelling. Another important point is that these early signs of an uptrend are often the moments when savvy investors start accumulating. Institutions in particular pay close attention to price patterns because they want to enter when the risk-to-reward ratio is favorable. That's why monitoring XRP's charts now is so essential. Even a couple of green candles over the next day or two could signal a complete shift in sentiment and encourage more inflows, both from retail and institutional investors. It's also worth noting that the recent ETF numbers we discussed earlier are directly connected to this price movement. As inflows increase, liquidity improves, which can stabilize the price and support an upward trend. XRP is showing early signs that it's moving out of the danger zone. Combine that with the broader narrative of Ripple's infrastructure strategy, and you have both a technical and fundamental reason to watch this market closely. XRP's potential reversal is further reinforced by its role in the institutional landscape. As more banks and financial institutions start adopting Ripple's platform, the demand for XRP naturally increases. This is not just about speculative trading. It's about real-world utility driving market behavior. Price movements are often a reflection of adoption trends, and right now the signals are strong. Investors who understand this connection between fundamentals and technicals have a strategic advantage in positioning themselves for growth. In short, XRP is at a pivotal moment. The combination of a potential trend reversal, strong support levels, and increasing institutional interest makes this one of the most important periods in its recent history. Watching the $2.30 level closely is key, because breaking and holding above it could confirm a full recovery from the downtrend. If that happens, the next targets could take XRP even higher, with momentum carrying it past previous resistance points. One of the most important elements in this story is Ripple's dual rail system and the introduction of ROUSD, their bank-grade stablecoin. ROUSD is designed to work seamlessly with Ripple's infrastructure, enabling banks to process tokenized value conversions without touching the stablecoin directly. This is a game changer because it solves one of the biggest regulatory hurdles for digital assets. Banks can stay compliant, keep fiat on their balance sheets, and still use Ripple's system to settle transactions efficiently. Another critical piece of this puzzle is the growth of ODL corridors. On-demand liquidity, or ODL, allows institutions to move XRP across borders quickly, reducing the need for pre-funded accounts and lowering operational costs. These corridors are expanding rapidly, connecting more countries and institutions every month. For institutional investors, ODL represents a clear, tangible utility that is easy to understand and scale. This differentiates XRP from many other cryptocurrencies, which often rely on speculative narratives rather than real-world applications. When you combine ROUSD and ODL with Ripple's broader infrastructure strategy, you start to see a very compelling story. Ripple isn't just building software for banks to use. They are re-architecting the foundation of global banking settlement, creating a plug-and-play platform that can handle fiat, tokenized assets, and stablecoins simultaneously. This means that Ripple is not just participating in cross-border payments. They are effectively becoming the backbone for institutional liquidity and settlement. It's also worth noting the strategic partnerships Ripple has been forming. From major banks to cloud providers like Google Cloud, these collaborations are helping Ripple test and scale their infrastructure on a global level. Acquisitions like G-Treasury and Fortis strengthen their position further, allowing them to consolidate key parts of the settlement process. Ripple is positioning itself as the unified settlement layer that banks will want to adopt, because replicating this infrastructure independently would be extremely difficult. The implications for XRP are huge. As more banks integrate into Ripple's platform, the demand for XRP as the settlement asset will naturally grow. Institutions need XRP to facilitate these transactions, which creates a strong long-term use case. This is very different from speculative coins or meme tokens that have no tangible adoption. XRP is becoming a necessary component of global financial operations, which could drive both liquidity and price appreciation over time. Finally, the long-term story is clear. Ripple is quietly transforming banking. Banks are no longer the gatekeepers forcing crypto to integrate with legacy systems. Instead, Ripple has built a modern, efficient, and compliant infrastructure that banks will adopt because it is too valuable to ignore. For investors, understanding this shift is crucial. It's not just about XRP's current price or short-term trends. It's about recognizing the structural changes Ripple is driving in the financial world. So, to summarize, XRP's strength comes from real utility, institutional adoption, and a strategic infrastructure play by Ripple. ROUSD, ODL corridors, and the dual rail system all reinforce XRP's role in global finance. The more you understand these dynamics, the better you can appreciate why XRP is uniquely positioned to capture long-term growth. This is the story that many people overlook, but it's precisely what makes Ripple and XRP such a powerful force in the cryptocurrency world.